I think this thing is live. Hopefully you guys can give me a thumbs up real quick. Let me know you're hearing me. Let me know the audio is coming through okay. It's 12 o'clock. I'm going to send out a couple poll questions. Appreciate it if you could answer these. First one is, have you been approved for a Paycheck Protection Plan loan? All right, looks like everybody can hear me. All right, very good. So we do have some folks who have received or have been approved for the loans. That's good news. If I can find the next poll question was, have you received your money yet? Has it been deposited into your account? On the first poll, 75% indicated yes, they'd been approved. And this is coming in, have you received your money yet? About not quite 40% have received the funding yet. Some have been approved, but not yet closed. Okay, thank you. And the final one was, do you anticipate paying employees even though you are closed due to COVID-19? So I know some of the folks on the webinar have been shut down by Governor DeWine's order. And there's a question about not yet approved. They've been offered an application in case funds become available. It looks like as long as the House approves or votes today and signs off on the bill that the Senate passed, it'll go to the president pretty quick, and hopefully money will be available. If we're working with you, then we should be able to get documentation to you shortly to help you with that loan process. All right, I'm going to switch over to the PowerPoint here. Here come the results on the employee question. About 80% are saying that they will continue to pay employees. I'm going to close that poll and reset it. And now we'll jump over to the slides. I only have about, I think, 8 slides maybe. This shouldn't be an hour-long program. It should last maybe 20 minutes. The idea is to give you some information that you can use to track and record and hopefully maximize the amount of the PPP loan that you can get forgiven based on your circumstances. Switch over here. There we go. Okay, so one of the things we want to do is make sure that we're not forgetting what the purpose of the PPP loan is. And it's not to fund additional operations or to expand or refinance existing debt or any of those sorts of things. It is really to move money from the Treasury to people who were previously working, employees and self-employed folks. We want to keep that in mind. So that's why they limited the forgiveness portion to primarily payroll costs. To the extent that you pay other things that are allowed, rent, utilities, mortgage interest, those sorts of things, they cannot exceed 25% of what you spend or the loan proceeds. And that's going to force companies to keep people on payroll or to potentially bring people back onto payroll. And we'll see how that looks here in just a minute. So if we review what the purpose of the PPP loan is, it's to provide businesses with 8 weeks of payroll coverage to take the place of state unemployment. So it's to provide that. Originally, the idea was, I think, to keep people from going on to unemployment. But because of the delays in funding this and the bank processing times and all those sorts of things, that kind of didn't happen. It's also to provide funds to keep a facility open so that the employees have a place to go to work, rent, utilities, etc., to keep the facility open. Now, there's some caveats in this, and that's only 75%, or at least 75% of the proceeds have to be used for the payroll costs. And the employer needs to maintain their full-time equivalency employee count. And that might be an issue with people going off on unemployment now. It might be difficult to get them to come back, to get your FTEs back up to where they were pre-crisis. The other piece of the caveat is that you cannot have reduced wages more than 25%. So if your employees took a pay cut to help the business keep going, if the pay cut was more than 25%, then that will affect the forgiveness calculation. So the timeline is everything kind of starts into motion the date the money hits your bank account. So this presentation doesn't have anything to do with calculating the amount of the loan that you might be eligible for or anything prior to you actually signing the documents and now the money has hit your bank account. So that's when the clock starts running. It's an 8-week period from that date, whatever it might be. Some of you, the clock's already running. Some of you, the clock is going to start probably within the next week or so. And then some of you who have not been approved, don't have loan documents or anything like that, that date remains to be seen. Once the 8-week period runs, the borrower needs to apply to the bank that funded the loan for forgiveness. And that's done after the 8-week period. And once the application is made to the bank has 60 days to make a determination of, one, it is some of the money forgivable, and what is the number that's forgivable. So we're kind of at the discretion of the bank at that point. So we want to be able to document what we did, how we spent the money, and provide them as much information with that application as possible. I don't know and have not seen where there's any kind of arbitration or ability to appeal the bank's decision. I would think there will be, but I haven't seen it yet. So how do we track this money? There's a lot of commentary about, well, it should go into a separate bank account, pay everything out of that account, and in my opinion, that might be more difficult or create difficulties that aren't intended. Sometimes you have automated payments that come out of your primary accounts for things like payroll. It's not incredibly easy to reconfigure some of that stuff to operate from what will be a temporary account. my suggestion is to treat it as a separate account in your bookkeeping, not necessarily a separate bank account with a financial institution. You can then pay your rent, your utilities, and your payroll out of that account, your normal account, and move money on your financial statements or via journal entry to take it out of the PPP sub account or whatever you want to call it to your primary account to show the money movement on your financial statements. When the money comes into your bank, you're going to need to probably make a journal entry or record a deposit. The journal entry is going to look something like this. You're going to debit cash. I would say a sub account. In QuickBooks, it's nice because a sub account of a cash account is treated as part of the main account. So you'll debit the cash account and you're going to credit a new general ledger account. I would call it PPP loan or US Bank PPP loan or something like that. That's going to be a new general ledger account. It's probably, I would generally classify it as a loan or an other current liability. The other way to do it in bookkeeping applications would be to record a deposit. And that deposit is going to go into the bank account that the money was deposited into. And then the source or the from in QuickBooks, you would put no or leave the from name blank because you're not receiving money from a customer. But the account is going to be the general ledger account, the liability account that you create to track that you have an outstanding loan with someone. What documentation are you going to need to keep? For payroll, you're going to need, my suggestion at least, is copies of your pay journals, retirement plan contribution, funding documents. You might have to get something from a custodian or record keeper to show that money was put in. Health insurance invoices that are paid, federal and state payroll filings. It might be a quarterly state unemployment report and the federal 941. It would also help if you had canceled checks for those various sources. Rent, you're going to need your canceled checks for that, but you should also be able to provide a copy of the lease to prove that the lease was in effect prior to the crisis and that you were required to make the rent payments. On utilities, canceled checks, bank statements showing the payments, and a copy of the invoice that was paid. Don't wait to collect these until the end of the 8-week period. Collect them as you go. You might create an expandable folder that's next to your desk or a manila folder file where you can throw copies of this stuff as they happen. Mortgage interest, again, you're going to show a copy of the mortgage interest payment statement or a bank statement showing that the money was paid to a mortgage. So I created based on a colleague of mine, Marty. He did a presentation for his clients late last week, and he had created a spreadsheet to help segregate and show the ramifications of what's going on with the PPP loan and payments going out. So I replicated what Marty had done, and what I'm going to do is share that with you now. We're going to switch from the presentation to, make sure I get the right one here. To a spreadsheet. Yeah. And what the design of this spreadsheet is twofold. One is there's a way to budget. So this first tab is budget, and then you have there's a loan amortization schedule tied to that. There's also a worksheet for sole proprietors and a amortization schedule tied to that. On the budget tab, my suggestion is to schedule out how you think payments are going to go. So the idea is, starting at the top left, you're going to put in your PPP loan amount, whatever that might be. If you had full-time employees, how many did you have? You're going to put in, that's as of March 4th, you're going to put in the full-time equivalent employees that you had from February 15th of 19 through June 30th of 19. And then you're going to put in the full-time equivalents from January 1st of 20 to February 29th of 20. Those numbers are used to determine how much of the loan is forgivable. If you're a sole proprietor, you would put in the net income from your sole proprietor business from 2019. As you put those numbers in, the spreadsheet starts to come alive. So the funding date might be April 18th. So your 8-week periods automatically fill in there. As you can plan out each week as far as full-time employees. You can also schedule out how your payroll may fall, depending on which week payroll runs. You might have entries in here of each for each week. If you pay weekly, you may skip weeks if pay is done bi-weekly, etc., or even monthly. You can fill it in as necessary to accommodate what your plans are, how your payroll falls. Employer taxes, that's going to be primarily state unemployment. In Ohio, we don't have employer local taxes. There may be jurisdictions out there that have those, but in Ohio, we generally don't. Your health insurance premiums you would fill in here. That would generally be a monthly amount. And your retirement match. I'm thinking that's going to be based off of the payroll that you've run during the 8-week period, but it might be the deposit for the prior year's employer contributions. Your average, if you're a sole proprietor, this starts to fill in. What these numbers represent weekly is 1/52 of the net Schedule C income. That gives you your total payroll, and then you can fill in an estimate of what your utilities are going to be. Again, these are generally going to be paid monthly, and some of them, depending on where you are, might be combined into one payment. As you fill this out, the qualified expenses and the payroll are going to have totals. So the total that we've spent in this example was $47,000 of a loan of $125,000. So we have $77,000 that hasn't been spent yet. So you may want to go back and revise how you spend money in the different categories to either use up the total loan proceeds, or maybe whatever's left over you want to use to repay the loan right away, or whatever hasn't been spent is going to turn into a 2-year loan. To the extent you've spent money on qualified expenses, this box is going to stay green. If your qualified expenses start to exceed the payroll costs, I'm going to force it to do that. Maybe it'll turn red. What that means is that your other qualified expenses have exceeded 25% of what you've spent. So to that extent, it's not going to be forgivable. In our budget, our estimated loan going forward is $63,000. That includes the amount not spent plus the excess over the 25% on non-qualified costs. Again, use the budget to schedule out what you think the costs are going to be. Most small businesses, in our experience, don't do a lot of pre-planning or budgeting. This is a great time to plan out how you're going to spend these dollars. Otherwise, you're going to get caught at the end of the 8-week period, wondering where the money either wondering where the money went, or scrambling trying to document how to show you spent the money appropriately. There's some codes up here, the B1, B2, and A. These have to do with the way the forgiveness is going to be calculated. You have the average full-time employees from June 30th of 2019 till now, and the full-time through February 1st of 20. As long as these stay consistent with the prior year, your loan forgiveness amount will be greater. And again, if we jump over to the PPP distributions, this is an actual calculation. I would use this to fill in as you're making payments. This is the live spreadsheet, if you will. This is where you're going to put in. I mean, this information may be exactly the same because it's not going to change from your budget, but let's drop it in. Get rid of, in this example, we're not dealing with the Schedule C filer, but use this to fill in your actual expenses for the time period, so that you can gauge as you're going along how much your loan might be, how much you can anticipate being forgiven, and do some planning. Megan, yeah, I think workers' comp is a cost that is included in your payroll costs. I would include it in your state payroll taxes. I consider it a tax. Once you've filled in the actual form, I'm going to put in some numbers here to make it live. So we've met the criteria. We're within the 25% criteria. Our estimated loan is $110,000 because we haven't spent all of the 125. So the 15 that we spent on payroll in this example would be forgiven. You may have had a smaller loan because your payroll wasn't as high. So that just adjusts the amount of the expected paycheck protection loan that you're going to carry. The promissory start, or the estimated start date of payments, is going to be October 15th, which is 6 months, 180 days from the date that your loan was funded. And the estimated monthly payment. The estimated monthly payment is coming from the amortization schedule. And the 6 month deferral, I haven't seen specifically where they're calculating whether it's an 18-month payoff from the start date or if it's actually a 2-year payoff from the start date of payments. That's something that we'll find out and potentially update on a future version of the spreadsheet. But it definitely affects your expected payment amount. The spreadsheet does not yet take into consideration how full-time equivalency or changes in compensation affect the payoff, the forgiveness calculation. We're expecting guidance from the IRS and the SBA on the order that those pieces are going to be considered. One of our professional groups, I'm going to turn that off and reshare it to a different worksheet here. One of our professional organizations has designed this spreadsheet. I can't share this with you like I can the spreadsheet that we created, but you can kind of see how they're anticipating the full-time equivalency coming into play. So first you determine how much of the loan exceeds the 25%. Then you take into consideration the change in the head count, and then you take into consideration a change in wages. That may be exactly how it comes out, but again, the guidance, the rules just haven't been released yet. So I hesitate on saying this is exactly how it's going to work. Now, in this spreadsheet, I've also created a tab for sole proprietors. This example would be a sole proprietor that has employees, but they don't have to. It could be just a Schedule C filer with net income in 2019. And again, what I've done is taken the 2019 net income, divided by 52 weeks, and drop that into our calculation. And I think that's going to be the forgivable amount of the Paycheck Protection Loan that they might get and it may or may not have had anything to do with the amount that they received in the loan, but I think that's the amount that's going to be able to be forgiven. Now, there's some caveats to that. It's based on 2019 because that's going to be ultimately the tax return that was most recently filed when this all comes down, or it should be. There's some caveats there. You can't game the system by reducing your expenses on your 2019 Schedule C. There's a revenue ruling that specifically prevents that, and it prevents it because reducing your expenses, in other words, increasing your net income, may qualify you for other benefits that you really don't qualify for. Things like making larger retirement plan contributions, or in this case, increasing the forgivable portion of a loan. The other caveat that we just briefly touched on this morning with my team was while the loan proceeds that are forgiven themselves have been explicitly determined to be not taxable income, I'm trying to think through how this is going to work, because the way, if you think about the wages that an employee receives from your business, regardless of whether you paid them through PPP funds or normal operational funds, whatever it is, the employee is going to pick that income up via a W-2 and pay tax on it on their personal income tax return. For a sole proprietor, I'm thinking that this amount of money, even though it's forgiven from a loan standpoint, I think it's still going to be treated as income, kind of like the W-2 income that the employees are receiving. And again, we just don't have the guidance yet on the specifics on how they're going to handle that. And kind of the same thing that we did for the W-2 employee business, we attached an amortization schedule to determine what the anticipated monthly payment on the loan might be. I can find, go. So what are the consequences of forgiveness? If you're operating as a corporation, an S corporation or a C corporation, I think there's going to be a book tax difference on your tax return. One, the loan that was on your balance sheet that gets forgiven is not treated as taxable income. We may treat it as book income, but for tax purposes, it would be a reconciling item and not affect the taxable income on your return. As I said, for a sole proprietor, still to be, we have to see what they're going to do with how that gets treated, and hopefully we'll know by April 26th. There's another Internal Revenue Code section 265 that has me as a practitioner concerned that specifically says expenses are not deductible to the extent paid using tax-exempt income. So how does that reconcile with the forgiveness of this loan? So does that mean that our W-2 wages that we pay to our employees are not deductible as business expenses? Again, I'm not quite sure yet. I just want to bring it to your attention. It's something that we're looking at, and until we get clarification, it's just a question in the cloud. And again, I already mentioned the sole proprietor. Clarification from the IRS and Congress and the SBA and the DOL, all these agencies are going to be chiming in on this, and we're supposed to hear from the SBA and I think the IRS by April 26th. So we'll be on the lookout for that. So again, the payroll rules. Well, actually, the gist of this slide is we get the question on what if I'm not bringing back specific people for whatever reason. and the rules do not require you to keep specific individuals on in your FTE calculation. In other words, if you had an employee who wasn't performing up to standards and you decide not to bring them back, then that's okay. You may replace them with another team member or a new team member, and they will go into your full-time equivalency calculations just fine. It's the 8 weeks versus average payroll in the prior year, the number of full-time equivalencies in the 8 weeks versus the average full-time equivalency in the prior year. The employee salary can't be decreased by more than 25%, but it doesn't say anything about keeping a specific person. So if you need to reshuffle the deck with staff, then this doesn't prevent you from doing that. What if you're concerned about the Paycheck Protection Loan not being enough? If your business is currently closed, you don't know if the cash flow will be stable for 8 weeks after funding, or you're concerned that business will not rebound within the 8 weeks and you need additional working capital. Create a cash flow model. Just do a budget of what your expenses are going to be, not only during the 8 weeks, maybe for the next 4 months, and work that plan. Potentially, you might be eligible for the economic income disaster loan. That's a much more rigorous process than the Paycheck Protection Loan, but it is a possibility. If your revenue has decreased by, I think it's 25% or more, then the EIDL might be something that you're eligible for. I think one of the critical things, especially if you have loans outstanding, is talk to your banker right now. What we're seeing is that lenders are being a little more liberal in allowing borrowers to be a little delayed in their payments. But talk to your banker, see what options they may have available. And obviously, talk to us. That's what we're here for, to help you get through this the best we can. If your business is still closed or doesn't have full-time work, do I still still employ people? Do I still pay them? And that's the purpose of the PPP, right? The intent is for you to pay employees to keep them off unemployment or to get them off unemployment. It's a strange thing for a business owner to pay people for not doing work that they were hired to do. But the circumstances are odd, so we got to roll with it. The things that you could do, though, if they do come back, if you do bring them back as employees, use it as a time to improve their skills. Provide training for management. Get your team together and figure out what your company is going to look like a year from now. You got to work on that. Do some strategic planning. There are programs out there that you can acquire for relatively small amounts of money. The Masterclass, you've probably seen them advertised on Facebook for months. They have a library of classes that are taught by very skilled people. The one that comes to mind is Annie Leibovitz on photography. Now, there's probably something more specific to your business that's in there, I would think, sales or negotiation, whatever it might be. There's a great class in there, but I can't remember his name. He's a hostage negotiator. There are classes on LinkedIn. There are classes from Microsoft. If you use QuickBooks, there's all kinds of QuickBooks classes, training programs that you could have your employees go through. If you're paying them anyway, you may as well help improve their skills. I'm sure there's something that's industry specific that would help your business if your employees knew more about it. For management, examine activities where you can pivot your business. Restaurants have done a great job in shifting to carry out. Businesses that aren't generally carry out type businesses. Have your management team work to determine your strengths and weaknesses. Review the marketing. Implement direct response rather than shotgun approach marketing. Review your client revenue mix. Where are you losing money? There's some tools for recession and crisis response materials that I could provide that offer additional solutions or options for keeping people busy that might be productive. What if you didn't get the PPP loan? Well, there's still an employee retention credit that's available. It's 50% of qualified wages up to $10,000. We think it's per employee, and it runs from March 12th of 20 through December 31st of 20. If you looked at the PPP, this might be a viable option that could be explored in the coming weeks and months. How do you keep up to date? We're trying to keep things up to date on our website, financialclaritygroup.com. There's a COVID-19 tab. There's a lot of information there on things that have been released and come out from the government agencies. It's where we post things like this webinar. I've thought about creating a private Facebook group for clients related to the PPP. It allows us to consolidate things into one place rather than sending out emails and that kind of stuff. You can ask a question and get an answer relatively quick. You might be able to learn from each other. The problem that I see, and the reason I haven't set it up yet, is that there's so much hearsay around all of these things that I don't want to be a purveyor of wrong information. And it's all over. I was talking to a client yesterday who operates as a Schedule C. As an S corporation, but their industry group was saying that they should apply for a loan, and it's based on their 1099 and all this stuff. And the person from the bank did not understand my client's business, didn't understand how they were operating, how they were set up, and was confusing the issue because the client couldn't take advantage of the PPP program the way the bank was suggesting that it be done. And I couldn't get the point across. So they're going ahead with attempting to get it. And ultimately, I think it's going to be denied, but we'll see. We're going to continue to do these PPP calls once a week. I'm going to move them to Friday. It'll be from 10:30 to 11:30. Provide whatever updates I can at that time. Allow you to ask any questions. Since you registered for this session, you're already registered for the future ones. You'll get emails for reminders. If you can't attend, that's fine. You'll get the replay video. You can always send questions to us. I would prefer they go to webinar@financialclaritygroup.com. That way they're not commingled with many mass volume of emails that each of us is getting. If you have additional questions, type them in and we'll see if we can answer them. So I got one vote for private Facebook group. Let me do a poll. So answer that poll question if you would. We go through these questions here. Does a Verizon cell phone bill for company phones that we provide to employees count as a utility cost? Megan, I think it would. It is a utility. It's got a business purpose. I haven't seen them specify that kind of detail yet, but if they do, we'll cover it as soon as we can in the future. Workers' comp, the spreadsheet. There's some fine tuning that I want to do on the spreadsheet, but yes, I will forward it out to you. I'll commit to by tomorrow at the latest. Like I said, there's some things I want to update and just clean up a little bit. Copy of the spreadsheet, yes. Copy of the presentation. Shannon, I'll make the spreadsheet available or send you a link to be able to get to the spreadsheet. There's not a whole lot of meat in this meat and potatoes in this presentation, I don't think. So I'll send you the spreadsheet, and if you have questions, we'll go from there and cover them next week maybe. Same for Nikki. Under the PPP as a sole proprietor, is the full 19 Schedule C income forgivable as opposed to the 100,000 limit? I think the limit, the $100,000 limit was on the application. I think that was kind of analogous to limiting an employee to the first $100,000 in wages for purposes of the application of the PPP or getting the loan. I think the full 2019 Schedule C net income does apply, but again, we're only looking at, I think, the average of the 8 weeks. So keep that in mind. Can you speak to the requirements that employer must retain 90% of employee base after the 8 weeks? Patty, I think that the employer needs to maintain the full-time equivalency through June 30th. I don't remember seeing anything about specifically 90%. I'm thinking that might refer to if you have a 10% reduction in full-time equivalent status, that 10% of your loan won't be forgiven. But I don't remember seeing anything specific about 90%. Nikki, I'll think about that. If I make the PowerPoint available, I'll make it available in the same link that I send the spreadsheet. I'll have to put disclaimers all over everything because this is all based on information as we know it right now. Any other questions? Not a lot of response on the Facebook group. I get it. All right. It's, we got a flurry of them there. Hold on. Rules or mandates on how we spend it on payroll. We're planning to go back March, April. Trudy, I think if you pay people more, it's not an issue for any purpose. As long as it's used for payroll, I think you're fine. It's just a matter of that it has to be spent or paid out within the 8-week period. If someone hasn't filed their 19 return yet as a sole proprietor, would it make sense to reduce some deductions to increase the amount that can be forgivable since it's dollar for dollar? Well, I think that book has already been written. You've already incurred the business expenses, and based on Revenue Ruling 56407, I think that would be problematic. So go read that revenue ruling before you attempt to reduce expenses or take expenses you've already incurred. I did not get an email with questions. I can jump over there real quick. Yeah, the forgiveness is based on spending at least 75% of the loan proceeds on payroll costs. To the extent the other operating costs are 25% or less, the full amount should be forgiven. Paying back pay back to March, again, payroll is all based on cash, so it's when you pay it. It's not so much when it was earned, or if you're making up for hours people may have been entitled to or something like that. It's all based on when the money's actually paid out. So it's, as long as it's paid out between the 8 weeks, you should be fine. Okay, next, let's see. I don't, if you're making payments for rent to two different sources or two different landlords, I don't think that's a problem. I think you want to make sure you have a valid lease, a document specifying that you are required to make those payments, and that lease probably needed to exist prior to, I think, February 12th. Payments. Can you apply for both the Paycheck Protection Loan and the disaster loan, the EIDL? My understanding is yes, you can. The issue is on the EIDL loan, the disaster loan, to the extent you receive the grant, what was initially touted as $10,000, that did not have you paid back. To the extent you get that grant, it reduces the amount of the PPP that can be forgiven. The thing about the disaster loan and that $10,000 is that the $10,000 is the max. It's actually, the way they've configured it is it's $1,000 per employee, maxed at $10,000. So it's not a $10,000 for everybody kind of thing. The presentation will be available, or the weekly ones be available if you're not able to attend. Yeah, Martin, these should go out as recorded videos. I don't remember what the setting is. Sometime after the session ends, everybody that attends should get, or everybody that registers should get a copy of it. Somebody asks, I do have one question regarding the employees. We had a couple of employees that left last year that we're not replacing. I did not include their payroll in the numbers on the application for the loan per our banker, wondering if that will affect the percent. That's a great question. If their wages were not in the original calculation, I would document that, but I don't know, and I haven't seen what the forgiveness paperwork or the applications for forgiveness is going to look like, Nikki. It's possible that may be an issue, but until we get more information specifically on that kind of issue, I don't know. Some don't have Facebook. Yeah, I get that too. Let's see. We had full-time employees this time last year and have 5 full-time employees now. However, we had 6 from December of 19 to March of 20. We went back to 5. I think you'll be okay. I think they're looking at the average for the course of the prior year. And again, I think that, Nikki, I think that might come into play for you as well. It's the average of the 2019 full-time employees, I think. But we'll be able to answer those questions more clearly, hopefully next week once we hear from the SBA. The full-time equivalency calculation and how that's going to come into play in the forgiveness, like I said early on, we just don't have a lot of specific rules on how that's going to be handled. Okay. Anybody else have any other questions? All right. Well, it's 10 till 1. I appreciate the time that you've taken with us. We'll be on again for this purpose next Friday from 10:30 to about 11:30 or until the questions stop. Hopefully we'll get some updates from the SBA, the IRS, and any other government agency that wants to chime in. Hopefully the House passes the legislation that the Senate passed last night and it gets to the president pretty quickly. I appreciate you tuning in, and I know this is a really challenging time for small businesses. We are on your side, and I have no doubt that the entrepreneur and the small business is going to get us out of this. So stay strong, keep your chin up, as my dad would say, and we'll see you next week. Thank you.